So let's look at Ghana's economic growth in the third quarter of 2025. Your blue bars is overall GDP. Your orange bars is non-oil GDP. So that's been put next to just to show you the non-oil story here. So the real story, of course, in the third quarter of 2025, economic growth, real GDP growth year on year, 5.5% in Ghana. Look at non-oil, 6.8. That, of course, a bit of a slowdown from the 6.5% we saw in the second quarter. And if we all go all the way back to the third quarter of 2024, so we're comparing year on year, 5.5 there to 7% in the third quarter. And then for those who are wondering, base effects, look at 7% in Q3 2024 versus 1.9% in Q3 2023. So lots of ups and downs for Ghana's economy. Let's have a conversation with Winston Tackie, who of course is joining us live from Accra, business analyst, business journalist. Winston, thank you so much for joining us. Welcome to the show. So, you know, what's your take? I mean, we saw a bit of a slowdown from the second quarter to the third quarter. What's your take? I guess general thoughts before we dive in a little further into the growth that we saw in the third quarter in Ghana.
Yeah, thank you for having me, Rotus. And interesting enough, as you've been mentioned, comparatively year-on-year growth, it tells you that the growth rate has certainly dwindled slightly. But if you look at it quarter-on-quarter, Ghana's third quarter performance was basically solid, with overall GDP expanding by 5.5%. And the real momentum clearly came from the non-oil economy. When you strip out oil and gas, growth certainly jumps to 6.8%, showing you that the broader economy is doing the heavy lifting. The services and the agriculture, rather than oil, were the real growth engines this quarter. So yes, it remains very much a non-oil story, and that in itself is encouraging because it reduces the vulnerability to the volatility we typically see in the oil sector. And this year, you and I can attest that there has been a lot of volatility in the oil sector. If we look at the global crude oil interplay, it hasn't really been supportive of most governments' budget, and this has reflected in the sudden growth slightly coming down compared to last year. But on the month-on-month, we've seen a real reflective growth that is typically backed by the services and the agricultural sector.
Now, in fact, thank you for mentioning that. So backed by the services and the agricultural sector, I did want to get your take on, I guess, you know, the size of those three and I guess how much they grew. And we've got a lovely chart that puts all of that together. So I think, you know, services, 32%, and then you've got industries at about 21 or so, and then agriculture, and then you've got their respective growth, agri 8.6, and then, yeah, perfect. So we've got, 39.7 for the share of GDP for industries, for services. Orange is industry at 32.1. Agriculture 28.2, so that's the size for our viewers, and then the three bars in the middle, year-on-year growth, agri leading the way, and then the contribution. So talk to us about that. It looks like it's a non-oil story, it's an agricultural story.
It's a very interesting story to tell because the services still remains the largest sector, accounting for about 40% of the overall GDP, followed by industry at around 32% and the agriculture sector at 28%. So, but in terms of growth, that agriculture actually led the pack with 8.6%, closely followed by the services sector at 7.6%. So while industry lags significantly at 0.8%, it appeared that the overall growth reflected that the services contributed the largest share, followed by agriculture, with industry which grew marginally by 0.2 percentage points. The weakness in industry is mainly due to the contraction in oil and gas part of the mining, which dragged down the sector despite the pockets of strength in the manufacturing. This signals a clear need for targeted industrial support and unlock competitiveness in the skill. And currently, government is focusing on a 24 economy model, which is focusing to expand the industrial outlook and ensuring that the growth that we experience in these key sectors are quite reflective. Just recently, the President, John Dramani Mahama, was highlighting the investment that is going to go into the agriculture sector that was last week, the 5th of December, the Farmers' Day celebration. He reiterated that government is going to commit hugely on the key poultry sector, the key crop sector, and these are important to ensure that inflation trajectory are under control, where food inflation and many inflationary elements in the basket are checked.
Now, looking at I guess we want to talk about the top 5 expanding and contracting sectors, but I really do want to get your thoughts on I think fishing and crops. But I think fishing was top at 23.1% growth. We had ICT 17%. Then you got transport and storage, trade and crops. So yeah, if you want to please touch on these sectors if you can, as quickly as you can, in terms of how well they performed.
These sectors are extremely important because they touch both the productivity and the livelihoods. This strong performance of the ICT and transport is quite positive signal. It gives us a positive signal, especially for digital transformation and logistics efficiency. So while the rebound in fishing and crops suggests improved rural incomes and stronger food supply. So now there's abundance of fish supply in the market. Previously, compared to last year, these fish stocks were quite expensive and difficult to have access onto the market. But if you go to the market now, you go to the restaurant, you realize on the menu, fish is quite available. So we're experiencing that bumper harvest season, and this is quite interesting. If you look at the numbers, the fish stock has always been dwindling compared to last year, December, the last year third quarter compared to this year. It was negative last year, but positive in the last 2 months. That is the third quarter of this year. That has been quite impressive. And these sectors also tend to have the wider value chain effect to supporting them. That is further supporting the value chain, those suppliers, those who hire the fishmongers. And this has a way of reflecting in job creation, consumption, and overall export subsequently.
Now, moving to the sectors that contracted, and I think you've already mentioned a couple of them, oil and gas, and then mining and quarrying. I mean, oil prices they've been down so far this year in the 60s level. So as far as how they perform, what are your thoughts on what you saw there from what the Statistical Office released?
When the Statistical Service released this data, I was able to go through, and one very important contraction I observed from the oil and gases, which fell by negative 18%. You realize that the mining and quarrying sector also fell by 2.8%, while health and the social work also contracted by 9.7%. Accommodation, which also had its share of negative 7.2%. The sharp decline in oil and gas is the single biggest reason why industry performed this year and this quarter, and it underscores how volatile the extractive sector can be. So the decline in accommodation and health services also signals some pressure in service delivery and consumers facing activities. This contraction highlights the need for diversification. That is, it appears that there's a need for investment in tourism and health infrastructure, which subsequently will reflect in the growth of those sectors. The oil sector extraction, you and I know that when it appeared that if you look at our budget, the oil sector has been a key supporter of the budget. There's been limited investment in the oil sector this year, but the coming year, it was reflective in the 2026 budget that government intends to attract more foreign direct investment into the oil sector. There's the need. They are looking at reviewing some of the oil policies and laws to ensure that most of the activities and exploration are quite made flexible for foreign investors compared to some sub-Saharan African countries. Now, Cote d'Ivoire has made their sector quite attractive. So most of the big global oil explorers are moving there instead of choosing Ghana, which usually used to be one of the biggest landmines when it comes to exploration. But we're hoping that there will be a turnaround in the sector after several losses in terms of big deal in the sector.
All right, Winston, got about a few minutes left. I want to quickly touch on this quickly. Your quick thoughts on inflation. It has been incredible seeing Ghana go from double digits inflation, I think 6% now for November. What are your thoughts there on the triggers? Is it a strong CD? Can we credit the CD strength for bringing prices down?
No, the city has performed extremely great this year compared to any other year. We've seen it decline from as high as basically 54% coming down to about now around 10 cities, 50, 45 pesos. And there's the decline in inflation in itself is around 6%, which is quite encouraging. But it would not be entirely accurate to attribute it solely to the currency strength. What the third quarter data shows us is a broad moderation in price pressures reflected in a lower GDP deflator, which suggests that both the monetary tightening and the improved supply conditions have contributed. While exchange rate stability certainly helps by reducing imported inflation, we need detailed pass-through analysis to determine its exact weight. For now, it is safer to say inflation is easing because policy is working and supply pressures have also softened. We've seen also the central bank intervention, which has been consistent until the warning from the IMF that the central bank should reduce its market intervention, which later came out with FX intervention framework, which is now bringing transparency in the FX market. So the city has been doing awesomely well, but it appears the downfall in inflation, which has been enormous this year, has been through intentional policy structure, which is quite reflective of what we're experiencing in the market. If you go to the market now, food prices that were higher last year are quite, the rate of increase have slowed for a long period this year. So the rate of increase has slowed down very much. Unlike previous years, during Christmas festivities, prices of commodities are high. But this year, if you go to the market, they are still quite reflective of the current circumstances.
And very quickly, do you expect the Monetary Policy Committee, which cut rates again at the last meeting, you expect the easing to continue? You mentioned tightening earlier, but now they've been on an easing cycle where they've been cutting. Mm-hmm. So do you expect that to continue?
It's going to be quite interesting. We've seen the trend, so it's quite reflective. But the central bank is working in quite cautious optimism. Moderating inflation and price pressure does not give the Bank of Ghana some room to maneuver, but any additional cuts will have to be gradual and must be clear and data-driven. If inflation maintains a steady downward path and the fiscal policy remains disciplined, I'm sure we could see some more easing. Many experts are projecting more about 350 basis points in the first quarter of the year. That is the first meeting of the Central Bank Committee in 2026. And we are hoping that this deflation, this reduction, will also reflect in price reduction in the market, as well as bring down inflation further. The target from the central bank governor is hopeful that the inflation will go as low as 5%. That is for the end of the year. That is, they're hoping that the December inflation will be as low as 5%. But many are also hoping that certainly we'll get to a point where we can say inflation is 2%. But market dynamics all come into play and many factors going into the inflation basket.
It's an incredible story. Winston, quickly, your balance of payments, 1.8 billion surplus, FX reserves, 11.4 billion. Can you quickly talk about, I think, was it gold, cocoa that have contributed to that? What your quick thoughts there?
But finally, I wanted to throw a light on the one thing that the government has done, which is quite revolutionary, is the gold board. The gold board has been a central pillar in this government strategy in keeping the economy growing. Now, gold marketing has been centralized by the gold board. There's overall outflow of how much is going in out of the country and how much is kept by the central bank. So if you look at our gold reserves, it has increased for the first time higher than we've ever done. And we have, at the moment, our external reserves are very good. International reserves are good, over 4.8 month import cover. And it appears that it's been consistent from September to now. We have about 11.6 billion in terms of external trade. And this is a positive outlook for not just domestic investment, but also external investors, what they look out for to see whether the country has the tendency to do business with key players. One thing that is a bit many see as a bit of challenge is how government will be able to settle its external debt. But it appears this government has had a roadmap turn out. If you read through the Bank of Ghana's previous meetings, it tells you that one thing, the overflow of the gold market, gold price in the international market has given government some loophole to be able to use some of the overflows to pay for some maturing debt obligations. And this is giving access to deal with fiscal management, which has not had any pressure on how government is managing the economy. If you look at indicators, growth rate is doing well, inflation is doing well, the monetary policy rate are doing well. So it tells you that government is now in a very comfortable place to enforce its policy that will bring economic transformation.
Fantastic. Winston, my producer is telling me to wrap up. But real quick, we had 5% growth in Q4 2023, 5% growth in Q4 2024. You expect another 5% print for the fourth quarter of this 2025. What's your outlook for Q4?
I'm looking at the sector that will be quite reflective. Always the services sector seems to be leading, and we are hoping that in the Q4, because of the new approach, we've seen the gold board just this afternoon has released its month-to-month figure, which I'm going to go through to assess how they've been trading and how much they've been able to accumulate. If you look at how much has come out of gold board alone in this their first 6 months of operation in Ghana, tells you that our gold economy is humongous positive and has a tendency to transform the economy. And Nigeria, I'm also optimistic that if we are able to have a quite reflective oil sector, that we are able to monitor the value chain, we can, as much as possible, say Africa's economy backed by proper resource management will necessarily bring about reflective transformation in the life of the citizen. We all keep saying that we are blessed with natural resources, but how important is it to ensure that these resources are really moved into the transformation of life? So I'm saying that certainly this growth rate, I'm projecting around 5.1% in the fourth quarter, and I'm hoping certainly my prophecy will come to pass.
All right, we'll see if it comes to pass. Winston Tackie, business journalist, analyst. Always a pleasure talking Ghana's economy with you. Joining us live from Accra. Winston, thank you so much for your time. Really appreciate it.